So there we go. It's bang 8 o'clock. Let's get started. So, welcome, guys. Welcome to the Womanomics Investor Brunch. Well, it's the investor webinar now. If you're watching this, I just didn't want to change the title because you guys are receiving the exact same content that I put together for a bunch of ladies last week, Saturday. So, if you didn't get a chance, again, my apologies that I couldn't take everybody, but I have made a way for you to receive all of the information that was delivered on Saturday. Okay, so disclaimer. The contents of this presentation or webinar is not deemed as personal financial advice. Please consult your financial advisor who will advise you according to your personal financial situation. All right. So nothing I say here is financial advice that you should apply without clearly getting a financial analysis done by your financial advisor. If you do not have a financial advisor or you've never sat down with a financial advisor and gotten a physical financial plan in your hand, I am available. All you got to do is send me a message on Facebook. You know, my page, it's of Financially Fabulous Females. Send me a message and we can try and arrange something for you. Now, to get a financial plan done, it does not cost anything. It's part of the financial services industry. It's what financial advisors do. So there is no cost to it currently. So, more about me. I am Yolanda Rose. I am a digital marketer. I am a property investor and I am a wealth planner. I actually left South Africa at a very young age. I was 20 when I left home. I went to Dubai, spent some time there. I went to Saudi Arabia, spent a lot of time there. Got married, had kids, moved to Bahrain, which is next door to Saudi Arabia. And I returned to South Africa in 2015 and I entered the financial services industry and the digital marketing industry here as well. I have been doing digital marketing for a long time. I returned to South Africa. I invested in property, and a lot of the content that I'm going to share today is going to be my experience in the property industry in South Africa. And I am an independent financial advisor and wealth planner as well. So I look after investments. I really have a passion for investments, retirement planning. I assist my clients with wills and estates. I do estate planning as well. Um, yeah, I also do a little bit of healthcare and getting into a little bit of short term. So I am independent. I'm not linked to any specific company and I'm completely advice driven. So about financially fabulous females, well, I came up with this concept of financially fabulous females to empower women with knowledge of planning for their personal finance and also to improve. Now, at this part of the webinar, you should have a sheet with you. It's not exactly available right now, but this is where we look at question two. And question two asks you who are the five people that you spend the most time with, because you are the combination of the five people that you spend the most time with. And those five people, what are they? Are they party people? Are they planners? Are they visionaries? Are they givers or they takers? Are they spenders? Are they savers or investors? Are they money wise or are they money foolish? So after this presentation is over, I want you to think about this question and think about the five people that you spend the most time with, because you are the sum of those five people. And if you don't like the kinds of behavior or characteristics those five people are exhibiting, that you find yourself exhibiting as well, you need to change your circle. Okay. It's also my goal to help women build generational wealth. Now, majority of households in South Africa are headed by females. And women also tend to live longer than men. And also, women are more loyal than men. In fact, I had a male client who recently got married, and I was like, we should sit down, you and your wife, and set out a personal financial plan for you guys. When you're having kids, when you're buying your first home, when you're doing this and when you're doing that. And he was like, no, he joined his wife's financial advisor. So I am focused on women. I do have male clients, but I have a passion for helping women, and we have a very big gap. In fact, when I run adverts for investors, 95% of the people that respond are men. And I run these really feminine adverts because I want to work with women. So women don't respond when you put out typical investment information. So I'm glad a few of you are here today, and a bunch of you applied to be at our session on Saturday as well. It shows that you're keen, and we really want to bridge that gap. For whatever reason, women are not investing as much as men are. We need to get to the bottom of that and empower you with the knowledge you need to get those investments going and to secure your financial future. Okay, this is a little graphic I found on LinkedIn, and I had to include it in my webinar tonight. Okay, if you see the comfort zone here, a lot of women are here right now. They're comfortable where they're at. They have the jobs coming in, their salary's okay. Their partners are taking care of the big stuff. The partners are planning, making sure the bond is paid, making sure the cars are paid. They don't really get into the nitty gritty of how the budget is done in the household. And then if you're here and you're watching tonight, you ideally you should be here on the fear zone. Something made you come here, and I'm assuming it was because you were in the fear zone because you don't have enough information. Maybe you lack some confidence in the investment space, or you're affected by other people's opinions. Like I said with question 2, you are the sum of the 5 people that you spend the most time with. And if those people are not knowledgeable about investments and personal finance, you exhibit that kind of behavior. So now that you're here, you are in the learning zone. You're going to be acquiring new skills. You're extending your comfort zone, and you are going to deal with the challenges and the problems that you might face with investments in general. Eventually, I want to find you in the outer circle where you're constantly learning, you're finding purpose with your financial plan and how you handle money. You're living your dreams. Your investments are working for you, and you're setting new goals, and you're living the best life that you could possibly lead, and money is not holding you back. So, the objectives of our session tonight, I'm sure you can hear my dog barking in the background. Somebody's outside. So now you know I'm live. This is not something that's recorded. I'm right here in Queensbury chatting to you. So, my objectives for tonight is to introduce you to investments, um, typical investment products from financial houses. We'll talk a little bit about risk. We'll talk about trading on the Johannesburg Stock Exchange. We'll talk about offshore trading, and we will talk about property investments. And I do have some bonus content for you. And I have 3 gifts for you guys. I'm going to give you those gifts a little later. So you got to stay in the end to get your hands on some really nice gifts. So, what is investing? Investing is a tool for building wealth, but not only for the wealthy. Anyone can start investing in an investment program, and various vehicles make it easy to begin with small amounts and add to your portfolio periodically. So never assume that you need this big pot to put into an investment. It starts small, and it basically snowballs over time. What differentiates investing from gambling is that investments take time. It's not a get rich quick scheme. So if unless you have a whole pot full of money ready to invest and to get that capital growth, investing is not going to get you rich quick. Okay, it's going to take some time in the market, some time in the industry to get to know the investment environment, and to reach a stage where you're confident in making those investment decisions for yourself. Investing is a way to set aside money while you're busy with life and have that money work for you so you can fully reap the rewards of your labor in the future. So, when we talk about investments, you can't You can't not leave the word risk out because risk and investment go hand in hand. Investment risk can be defined as the probability or the likelihood of occurring losses relative to the expected return on any particular investment. However, the rule of thumb is basically the higher the risk, the higher the reward. There are no guarantees in investments except when you go into a guaranteed investment. If you're taking out an investment anywhere, it is assumed that you know that there will be losses unless you are in some specific program that guarantees you a return. Now, banks offer you guaranteed interest. They offer you a guaranteed return. And because it's guaranteed, the risk is very low. So banks will offer you, in fact, on Facebook, Investec, the investment bank, is running an advert. So you invest 100,000 rands with them, and they will guarantee about 8% a year. Now, for me, that's a very low return because if you factor in inflation, inflation's sitting at around 5.5%. So if you put your money in with Investec for 5 years, you're basically guaranteeing yourself around 2, maybe 3% a year, 3.5% a year if you're lucky. 3% of 100,000 is what? 3,500 rand, really? It's not worth it. For me personally, I'm a high risk investor. It's not something I would go for. I would like to see growth in double digits. And although the South African environment is not there yet, there are ways to get double digit growth while investing South African platforms, and we're going to talk about that in a little while. And remember, guys, if at any time you have a problem seeing what's on my screen or what's on your screen, or if you have a problem hearing me, please type it up on a chat box. If you're watching this on a desktop, your chat box is to the right of you. If you're watching this on your phone, the chat box is below the slides that you are viewing. So, a pro tip is in investing is to start early. Okay, now a 25-year-old who wants to accumulate 1 million Rand by age 40 would need to invest 880 Rand each month, assuming a constant return of 5%. A 35-year-old wishing to accumulate 1 million Rand by age 60 would need to invest 1,679 Rand each month using the same assumption of 5%. A 45-year-old would need to invest 3,741 Rand each month to accumulate the same 1 million Rand by age 60. So that's almost 4 times the amount that the 25-year-old needed to invest. So starting early is especially helpful when you're saving for retirement. Time in the market is key. So the younger you start, the more beneficial it is for you. And in South Africa, a newborn can start investing. Obviously, his guardian or his parent is doing the investing for him. But if you have a child has a South African ID, that parent or guardian can take that ID, go to SARS, and get a tax number. Now, just because you have a tax number doesn't mean you're going to be paying tax. It just allows you to start investing. And we'll talk about how you can get away from paying tax in a little in a little while. Well, not really getting away, just playing by the rules and not paying any tax. So any South African can invest. As long as you have your South African ID and an income tax number from SARS, you can be investing, and you can have a retirement annuity as well. And it's really a nice tool, especially for young people. And if you have young kids, instead of getting their aunts or uncles or grandparents to buy them these fancy gadgets and toys, rather put that money into a bank account and have it invested. Because by the time that kid turns 18, 18 years in the market, you can get some really, really good growth. So here's an example of high risk investments right now. It's cryptocurrency. Stuff like Bitcoin and Ethereum are really, really, really high risk, especially since cryptocurrency is not regulated in South Africa as yet. If you are holding cryptocurrency and you are trading cryptocurrency, and you're making some good profits, and you should, in the last 2 weeks, you should have made some good profits with Bitcoin increasing, you are liable to pay capital gains tax to SARS. So remember that about crypto. And if you are in crypto, it's up and it's down. So it's extremely high risk. Equities is also high risk. By equities, we are referring to shares in South African businesses, and you trade shares on the JSC. And we also talk about currency trading or forex trading as being extremely high risk because the fluctuations. Once again, one wrong policy move, um, currencies and billions are wiped out. I mean, we watched it 2 years ago with the change of finance ministers in South Africa over one weekend. Millions and millions were just wiped out of the South African economy. So it's very, very high risk. Moderate risk is property, and low risk and low return, of course, bank deposits, holding physical cash, holding foreign currency. Gold is also low risk because gold is always in demand, is just based on the international prices. And you can say money market as well. So if you're holding money in your bank account, instead of holding it in your checking account, ideally you want to hold it in your money market. Maybe you'll get a 2-3%. 2 or 3% is better than holding it in your checking account and getting 0%. That's how I view it. So the banking instruments are basically low risk, low returns. So what's your risk appetite? Now, whenever you do sit with a financial advisor for investments, one of the things that we do is assess your appetite for risk. Are you an aggressive investor? Are you willing to invest 100,000 rand with the aim of reaching 400,000 rand profit, but there is a chance that you could lose half your investment? I mean, are you okay with losing money if the chance of really making money is far higher? Or are you a cautious investor? You don't want to lose anything at all. You rather have that slow, steady growth and slowly build up your investment portfolio that way. So basically, it's a series of questions that is used, excuse me, that we use to analyze your risk profile and to basically classify you as what kind of investor are you, because from there we can tell how to structure your portfolio. Should we put you in equities? Should we hold cash for you? Can we put you in property? That will help us decide. So question 3. Okay, do you guys know what is the Aussie 40? This is where you're going to use your chat box. If you know what the Aussie 40 is, you got to just type it down below so I can see it on my screen. So if you know it, say yes. If you don't, I'm going to assume that none of you know what the Aussie 40 is. Do you guys know what the S&P 500 is? Okay, I'm not getting any yeses, so I'm assuming you don't know. Do you guys, well, you should know what equities are now. We did discuss it. Do you know what an asset manager is? Do you know what interest exemptions are? And do you know what the abbreviation TER means? Okay, these are things that are in the investment environment, things that we need to know. And there's a lot more that you need to know, but we only have an hour today, so we can't really go into everything. So let me break it down for you real quick. The Aussie 40. Okay, good. All share index. Okay. The Aussie 40 is the top 40, shares on the JSC. Okay, that's what the Aussie 40 is. That changes all the time. The top 40 companies in the country change all the time. So one week it could be 10 companies who could just fall off depending on their performance on the JSC. Then we have the S&P 500. Now, S&P, the ratings agency, Standards and Poor, they've been around for almost a century, and they track the top 500 companies on the New York Stock Exchange. And that tracking portfolio is called the S&P 500. Now, we're going to talk about the S&P 500 in a little while. The S&P 500 has really been crushing Donald Trump. He's been making some good moves for the US. And we'll talk about the S&P 500 a lot more as we proceed. Then there's equities. By equities, in South Africa, when you hear equities, we're referring to shares, shares in companies. Asset manager, people like Alan Gray, they are asset managers. People like Coronation are asset managers. Then you have the big financial houses like Discovery, Liberty, and Momentum. All of them have their investment arms, and those investment arms are asset managers. So the asset managers, they run the various funds and the various portfolios. Then you have interest exemptions. This actually refers to your tax returns. When you're investing, there are certain interest exemptions. For example, if you have a whole bunch of money collecting interest in the bank, um, the South African government allows you your first 23,800 rand to be tax free. So for last year, if you had a bunch of money in your bank and if you made 30,000 rand in interest, 23,800 rand of that 30,000 rand is tax free. So everything above that till your 30,000 will be taxed at the tax rate. So interest exemptions are important, especially when deciding what type of investment you want to do. Because of course, nobody wants to pay a lot of tax. Taxes are due. We should not avoid them. They're important for running the country. We got to pay our dues wherever we can. But ideally, we want to keep as much money for ourselves as we can. And there's legal ways of doing that, certain type of investments that we should be selecting as opposed to others. Okay. And the abbreviation TER refers to total expense ratio. Investing is not for free. You got to pay it. The asset managers have to be paid. The companies have to be paid. The portfolio managers have to be paid. Running the platform, it all costs money, and all of that comes from is calculated in the total expense ratio. So when you are investing with financial houses, it's important to look at the total in the total cost of your investment. You don't want something to have a very high cost and all your money is going into paying fees instead of growing your wealth. So that's basically what those abbreviations mean. Okay, how am I doing for time? Okay, we're at 22 minutes. Okay, understanding asset classes. Now, in South Africa, we have four traditional asset classes. The first one being money. Money is the lowest risk. By money, we mean money market funds or holding hard cash. You've got stacks of money in your safe at home, holding dollars, holding euro. Um, those are cash investments. Then there's bonds, and we're not talking about a mortgage bond here. We're talking about government bonds, where government basically issues these bonds to fund the country. I mean, our taxes are not enough. So people basically lend money to the government at a set interest rate, and the government will pay you maybe 7-8% a year. And a lot of our debt is held with foreigners. So when policy uncertainty comes about, or high-ranking officials in our government say something in public that's not in our best interest, you find that investors just start dumping government bonds, dumping rands, and that's where things start to go wrong. So basically, government bonds are government asking people to lend them some money, and they have been fairly stable. It's a very low risk investment. Low risk, remember, low return. So government hasn't defaulted or anything like that. It's fairly stable, and it's fairly safe to invest in this. And you can only buy government bonds via the financial institutions, and I think there's certain banks that do allow it as well. But essentially, you want to invest in a fund where the risk is much lower. We're coming to that now. And then we have property as an asset class, and that can be broken up into direct and non-direct. Direct, where you're actually holding physical property, you have a rental flat somewhere, and people are paying you money. It's an investment. Then there's non-direct a property that you hold. You hold shares in a property company. That property company has some high-end commercial all over South Africa, and people pay them rent. And after expenses, those dividends are paid to you. Property has not been doing very well in South Africa in the last couple of years or so. And then we have equities, as we've discussed. It's holding shares in companies. So when it comes to unit trust investments, unit trusts basically hold a blend of these four asset classes. And that's how we come up with aggressive portfolios for the aggressive investor and cautious portfolios for the cautious investor. So obviously we have said that cash is safe. So for cautious funds, you'll find that the asset manager will buy up a lot of cash. They will buy up a lot of bonds. And whereas the aggressive funds will be high in equity because they want to make money fast. Those investors are willing to take the risk. They ready to take the ups and downs in the with what those investments return for them. So a blend of these traditional asset classes is what happens in those portfolios. And I'm coming to portfolios now. It's kind of like a circle. You got to understand one to know what's happening next. So to understand this investment now, we have the asset manager, Alan Gray, for example. Alan Gray has various funds. For example, Alan Gray Balanced, Alan Gray Cautious, Alan Gray Equity, Alan Gray Managed Cautious. So Alan Gray has a whole bunch of funds for a whole range of investor types. And each of those funds are blends of the asset classes to reflect level of appetite risk: aggressive, moderate, conservative. And all the other asset managers in the country basically do the same. Coronation, Prudential, Fairtree, they all do the same thing. Okay, so if we look, this is an actual breakdown of the Alan Gray balanced portfolio as of the 30th of April. So this fund is a balanced fund. So it's for people that want to play it a little bit safe. They're willing to take some risk, but not a lot of risk. So they like the balance. So you can see that this fund holds 73% equity, 1.5% property, safe, 13.5% bonds, safe, 8.9% cash, safe. Whereas if we look at Alan Gray Equities, which is an aggressive fund, equities is sitting at, I'm sorry, my picture is blocking that. It's just a software. I can't get rid of it. Alan Gray Equities is sitting at 94.6% in equities. Bonds, I can't really see it here, but cash is at 3.5. So with that whole 7% is just split between cash, bonds, and property. So Alan Gray Equities is a very high equity fund, high risk fund. And they won't tell you, they'll tell you the top 10 holdings. You will find that in the fund fact sheet, which your financial advisor would give you. And they will tell you what kind of cash they're holding. Are they holding foreign currency? Are they holding it in money market? They won't exactly, they'll just say property. They won't exactly say what property, but equities, they'll probably tell you maybe they have 40% in Standard Bank, another 20% in Discovery, another 2% in Lonman. They'll give you the top 10 holdings for each fund right here. Because obviously it's like a secret recipe. If one asset manager knew what Alan Gray Balanced was holding, they will all buy the same thing and will all get the same kind of performance. So it's like a secret recipe. People are very guarded about what happens in those portfolios. And we all go in there and we buy units in Alan Gray Balance. We buy units in Alan Gray Equities. So if we have an investor, for example, let's say Alan Gray Balanced, one unit in Alan Gray Balanced is 1 rand. So if an investor invests a million rand into Alan Gray Balanced at a rate of 1 rand per unit at the beginning of the year, so that's how he spent his million rand. So during the year, the fund manager, he'll buy and sell shares in Standard Bank, he'll buy and sell shares in Discovery, he'll buy and sell shares in ABSA and all of the various other companies that he holds. He'll buy and sell foreign currency. If a dollar is low, he'll buy it low and then he will sell it high. And then at the end of the year, we find that a unit in Allen Gray Balanced is now worth 1 Rand and 35 cents. So that 1 million Rand actually gave you 350,000 Rand profit here. Obviously, it's volumes that actually brought you up to 350,000. But this is how unit trust based investments actually work. It's the difference between the buy and the sell, and the difference in the price that you buy an actual unit. This type of investment is very low risk. We're looking at a long-term view because, I mean, the average person doesn't really have $1 million to put in this kind of investment. I mean, you'd rather go buy property or something like that. Most people would if they had 1 million Rand. So investing in the unit trust platform, Allen Gray Balance, Coronation, Fairtree, Old Mutual, Smooth, or Old Mutual Balanced, we're looking at a long-term view because we want to see those unit prices rise. And obviously, the timing of when you get into the market is important as well. If you buy high and then you sell low, you're actually making a loss. Whereas if you buy low and sell high, that's where you are going to make a profit. And in fact, in anything, not just these kind of investments, in anything, even in business, you buy something, you make money when you buy, not so much when you sell. Okay, so the key is to basically diversify your portfolio. If you had 1 million Rand, don't just put it in one portfolio. Have a blend of portfolios. You can have a blend of aggressive portfolios, a blend of balanced, and a blend of conservative portfolios. So you're spreading risk. If bonds are doing really well, usually equities are pretty down. So you have that sort of balanced outlook, and again, it depends on your risk profile as well. But diversification is key when building your investment portfolio. By diversification, I also mean don't put everything with traditional financial houses. Buy gold coins, buy Krugerrands, buy diamonds. Obviously, storage is an issue, but diversify. That's the main thing that I want to get across to you. Okay, so the traditional investment products from investment houses are these listed below. Firstly, there are endowments. Endowments are very tax heavy. You pay a lot of tax in endowments, and financial advisors push people to take endowments because companies compensate us better for endowments as compared to unit trusts. So if you're looking to invest, and you've looked at all of your various interest exemptions, you've exhausted everything, endowment should be the last thing that you actually invest in. Okay, it's very tax heavy, there's a lot of fees involved, and your money is locked in here with endowments. Hi Zodwa, thanks for joining us. I see everybody's comments. I just so focused on my slides. Okay, so endowments, like I said, it's fixed. Most places, those investments are fixed for 5 years. I see companies also have the 10-year investments as well. There are heavy penalties for withdrawing your funds before the period is up. Okay, so endowments are good if you exhausted all of your other investment avenues and you just need to stash it there. The also important thing about endowments is the financial house pays your tax to SARS on your behalf. Remember, income tax number is everything is linked. Um, so although you don't pay tax to SARS directly, tax is paid for you. You are paying your tax with endowments over here. You get your tax certificate from the company. Okay. Then there's unit trusts. Unit trusts are a very cheap way to invest. The platform fees are really low. You have a greater variety of what you can invest in. There's over 1,200 funds in South Africa that you can invest in. Allen Gray Balanced and Allen Gray Equities are just two of those. And those are two very expensive funds with high total expense ratios. And there are other funds that move the same way and get the same kind of growth that these two funds get at a lower cost. And your financial advisor would be able to advise you on those kind of funds. All right. So unit trusts are great, easy to access. There are no penalties if you want to take out your money. If you're having a bad month and if you want to stop those payments, you can. You can go in with a lump sum, or you can start with just 500 rands. It's a great way to get started with investments on the unit trust platform. As I said again, it's cheap. Now, when you make money with unit trusts, it's not interest accumulating like the bank. Again, it's buy low, sell high, and you want to be in the market for a really long time to get to see some real results. That's how you want to be. And when you do make a profit and you do cash out your units on this platform, you are liable for capital gains tax. Also every year as well, depending on and how that fund makes money. Because remember, when you're holding shares, companies pay you dividends every year. And so the financial houses will pass on those dividends to you. So all of that takes tax, and it's good to have a good tax attorney to sort all of this out for you. But essentially, the financial houses, they give you these tax certificates that you submit to SARS. So I mean, I do mine myself. It's not that essential, but when you're moving with big money, you need a good tax practitioner. Then we have retirement annuities. Now, government is keen on encouraging South Africans to save for their retirement. They don't want us to be a burden on the social system, which is kind of obvious. So they give us the opportunity to invest in private retirement annuities, especially for those that are not employed and you don't have a pension plan at work or anything like that. You can invest in your own personal retirement annuity. Now, government tells us that every South African is allowed to invest 27.5% of the taxable income. So if you earn 100,000 rand a year, okay, let's make it R1 million a year. Okay, if you use your full exemption of 27.5%, sorry. So that will be around 275,000 rands. So you can take 275,000 rands, you can bring down your taxable income, thereby bringing you down on the tax brackets, and thereby you're paying less tax, and you can claim back your rebates later on in the year. It's actually quite nice. Retirement annuities are really nice. The only problem I have with retirement annuities is that when you reach retirement age, you can only take out 1/3 of the retirement annuity, and you are forced to buy a living annuity with the balance of the funds. And at this stage, government allows us to take 500,000 rands out of our retirement annuity, tax-free. Everything else will be taxed at your tax rate. So I like retirement annuities because of those tax breaks. It's really nice. But then you have the problem of your retirement funds being held, and 2/3 you're forced to buy a living or life annuity. So ideally, when it comes to your retirement planning, your retirement annuity and your pension plan should be at least two of your many sources of income that will look after you during retirement. It shouldn't be your sole source. That's just my recommendation. Okay, then you see a little abbreviation below retirement annuity that says REIT. It says REIT. It's pronounced REIT. What it stands for is Real Estate Investment Trust. Now, we have some REITs in South Africa that you can invest in. It's really nice to invest in it. What happens is you've got these trusts that own high-end property all over South Africa, high-rise buildings, fancy office parks, malls, and these REITs get their income from rental, of course. So we as investors, we buy shares in these REITs, and the REIT runs the whole property, manages all the property, pays all the rates and the levies and the taxes and the insurance and everything. And as much as 75% of those profits are passed on to the investors. So it's REITs are really nice. If you're looking at property, you can start from just 500 rand a month, and you part owner in one of the fancy places in South Africa, like Sandton Square and all these fancy malls. Okay, then you have ETFs. ETF stands for exchange traded funds. Exchange traded funds are basically baskets of these traditional shares that you would find. For example, you'll find these platforms have shares such as mining shares. So mining shares will be a basket of De Beers, Lonmin, Anglo Platinum, and this basket will be just shares of those mining. Then you'll have automotive, and then you'll have agricultural, healthcare, financial services, banking. Uh, uh, ETFs are easy to invest in, very high risk because, again, we said they are equities, and it's so easy. You can do it on your phone. And in fact, one of the gifts I have for you later on in the session, at the end, I've got a 50 Rand gift for you where you can go and start trading on the JSE directly after this. And then traditionally, we have stockfels. I know it's not, stockfels are very informal, but there are about 50 billion Rand in South Africa that are invested in stockfels. And that's a huge amount of money. And we don't really have regulation for it. And we don't give these stockfell investors avenues to enter the more traditional financial houses with that money. Can you imagine 50 billion Rand into Allen Gray balance to Allen Gray equity, giving you a 12%, 18% a year return? That would be amazing. And they don't really have a space in the traditional financial area in South Africa. The banks are coming into play, and they're letting these stockfels hold their money in the banks and have some legal way as to how everything is accessed. Everything is very transparent, but the interest that they're offering these people are basically ridiculous, like a 4 or 5%, when we've got inflation at 5.5%. That money is actually eroding by 0.5% a year. Okay, so stockfels are huge. It put a lot of people through university, paid for a lot of lawyer studies, a lot of doctors that came out of stockfel investments. So it's nothing to be ignored. I feel it's very legitimate. If you're in a good stockfel and there's a lot of trust, I mean, if you can take that money into traditional investments that I'm showing you now, you can see some good returns as a stockfel group. Sorry, I just have to have a sip of water. My throat is so dry. Okay, so if you want to buy or invest in a fund in South Africa, and we'll always go back to Allen Gray balance because it's huge. It's like 350 million Rand that investors put in there. It's very popular. In fact, all of my clients, when they come to investment, everybody wants Allen Gray balanced. It's that popular. So ideally, you buy it directly from Allen Gray with an Allen Gray broker, but all financial houses have access to Allen Gray. If you're sitting with a Liberty financial advisor, he can put you onto funds from Nedbank and ABSA and Old Mutual. Everything is interlinked. It all happens on a very transparent, uniform platform. So you could be with company A, but you can hold portfolios from company B, C, D, E, and F. It's all very seamless. Okay, but ideally you want to go with a broker or a financial advisor, a good financial advisor who's going to be advisory based and not sales based, and pushing you to take these expensive products like an endowment when you should really be on a unit trust platform. All right, I've got just 15 minutes, so I'm really going to push. Okay, so I'm going to rush a bit. If you need me to slow down, just type it down in the chat box. I just want to get to the property. I know you guys are here for the property stuff, so I want to take you there really quickly. So traditional offshore investments. The South African economy is about 1% of the world's GDP. So you can invest offshore. You can take 10 million Rand. Every South African can take 10 million Rand a year offshore. You can take it, you can buy it in foreign currency. send it to your overseas advisors, or you can send it with the financial houses here in South Africa as well. And they have overseas holdings like Isle of Man, Isle of Jersey, and all of that. And every South African is limited to 10 million a year. And you have to get clearance from the Reserve Bank to take this kind of money out of the country. Then you can also take $1 million out of the country, no clearance needed. And you can directly invest in foreign investments. And like I said, a financial advisor would be able to do that for you. And then you can invest offshore in South Africa in rands. Okay, and you can do that on the unit trust platform. And earlier we spoke about the S&P 500 that tracks the top 500 companies on the New York Stock Exchange. You have the opportunity to invest in rands in those portfolios right here in South Africa. And one of my favorite funds is actually from Stanlib. Stanlib is a collaboration between Standard Bank and Liberty. They have these two new funds that they came up with in March last year. One is called the S&P 500 tracker, that they invest everything into the S&P 500. And then they have the S&P 500 tech tracker, which tracks the top 500 tech companies on the JSE. So companies like Apple, Microsoft, Google, Amazon, all of that is in the S&P 500 tech tracker. Okay, did I miss a slide? I think I did. Okay, no, I didn't. All right. So then we have tax-free investments. Now, government, like I said, wants us to save. And they came up with something called the tax-free investment in 2015. And the tax-free investment basically tells us that every South African, that means even babies with a tax number, which their parents get them, are allowed to invest 33,000 Rand per year in any platform you want. And there are specific tax-free platforms, of course. And any profits that you make from these investments are all tax-free. Every South African is limited to 500,000 Rand per lifetime. Obviously, as time goes on and with inflation and stuff like that, the amounts will go up. And there is no age limit, like I said. So you can use the tax-free investment and your 33,000 Rand per year allocation and take that money offshore into the S&P 500 and the S&P 500 tech tracker. All of that money will go offshore in rands from 500 Rand a month and grow in double digits as those 500 companies grow. And you don't pay any tax on those returns. Now, obviously, again, it depends on when you enter the market. If S&P 500 is high, you don't want to enter. Then you want to buy when they are low. Okay, and that's something your advisor can advise you with. So if you don't have a lot of money, you don't have that 1 million to take over or that 10 million to take over, the tax-free investment is a great way from 500 Rand a month. Okay, it's the best thing ever. And if you like what you hear tonight, I am going to be doing a retirement webinar in a couple of weeks, and I'm going to show you how you can use the tax-free investments to really save on tax during retirements. It's just because there's some calculations to do. I don't want to get into it here, but tax-free investments is a must. If you ever start investing, always start with your tax-free investments. Once you reach your cap of 33,000 Rand a year, then look at unit trust platforms, then look at endowment platforms. Okay, here's an example of some of the companies that are in the S&P 500 and the S&P Tech 500. This is the Alibaba Group. In 2008, their shares were trading at $5.25. In 2018, those shares are $192. Amazon was trading at $76. Last year, they were at $1,710. Google was trading at $166. Last year, they're trading at $1,140. So now you see what I mean with time in the market. I mean, if you put 100,000 Rand in 2008 in the S&P 500, how much would you have right now? More than doubled of what you invested for sure. Okay, so trading on the JSE, like I said, the various asset classes. We have cash, bonds, property, and equities. And trading on the JSC, we only looking at equities, which is basically shares in companies. Now, with the advent of technology and apps and things like that, it's so easy to trade on the JSC. You download an app, you do your FICA, you deposit some money, and then you buy. It's that easy. Um, there are platforms you can use. Standard Bank has a share trading platform. There is another company. I think it's share something. I can't remember it right now. I prefer Easy Equities. What I am going to do is I'm going to email you guys a little gift a little later on. Um, with 50 Rand that you can redeem from Easy Equities, and you can start trading after you do your FICA. Okay. So there's two exchanges in South Africa. One is the JSE, Johannesburg Stock Exchange, and then there's a new one that came up a couple of years ago. It's the A2X. There's about 10 companies on there, and one of them is Patrice's Rainbow. Standard Bank is also trading on A2X as well. So in 10, 15 years time, it's going to be it's going to be a decent size exchange. So like I said, you can trade via a broker or via an online platform. And I'm going to send you those links to your free gift for Easy Equities. Okay, so ShareNet. See, I knew it was Share something. So these are the trading platforms: Easy Equities, ShareNet, and Standard Bank. You download the apps, do your FICA, deposit your money, and buy what you want. But obviously, it's more to that. You got to do your due diligence, research the companies, research the political scheme, what our policies are, and then take your decisions wisely. How to buy property without bank finance in South Africa. Okay, firstly, there's an act called the Alienation of Land Act. Chapter 2 talks about buying property of installment sales. Okay, I bought one property like this with the Alienation of Land Act, and I'm selling another property with the Alienation of Land Act. Actually, I'm married to a foreigner, and the banks in South Africa don't give us 100% bond. They only wanted to give us a 50% bond, and we really liked this house when we returned, and we wanted to buy it, and we were really bummed. And I found this Alienation of Land Act, called a couple of attorneys. Very few attorneys know about it. I only found one attorney that could help me with it, and she's my go-to attorney right now. And she could answer all of my questions on the phone, and she's absolutely brilliant. So the Alienation of Land Act, basically, you need a willing buyer, a willing seller, and whatever the amount is needs to be paid in 5 years. So this is what I've done. When we were rejected for a bond, I told the agent, you know what, we were rejected. And then I came across the Alienation of Land Act. I went to the seller, bypassing the estate agent altogether, and I said, you know what, we're financially stable. The reason why we're not getting a bond is because my husband is a foreigner. We want to buy this house with the Alienation of Land Act. We'll pay it up in 5 years. And if you agree to this, we will pay 400,000 Rand above the asking price. We put the 400,000 Rand there. Okay. You don't have to if you have a willing buyer, willing seller. And right now, it's a buyer's market because people are selling. I was just so surprised this week. I was on Property 24, and houses in Durban North are being reduced because people are just not buying. So if you can get a willing seller, you can get them to sell to buy their house using the Alienation of Land Act. The thing is, it must be paid off within 5 years. However, you can negotiate. As long as you have a willing buyer and a willing seller, you can negotiate anything you want. I mean, I know somebody who's negotiated with a seller to say, you know what, let me stay on this house for 2 years. I will pay the rent. I will pay the rates, levies, lights, water, maintenance, everything, and count my 2 years rental as a deposit for the house. Okay, and then we will start our installment sale. I mean, willing buyer, willing seller, this can work. I want to show you one of the deals that I actually have. with the Alienation of Land Act. Okay, let me show you some calculations first on how much money I saved with this. So here is the house that we bought was listed at 1.4. Okay, if I took a bond, we had to put down 140,000 down at a 10% interest rate. Our monthly repayment for 20 years would be around 12,500. Then I had to pay the total once-off costs. That was 222,000. Bond registration, transfer fees, etc. And we had to meet a minimum of 42,000 rand per income per month. Okay, but let me show you how much I saved. Okay, so if I paid that deposit of 10%, my actual bond that I would need would be 1.260. Okay, this is the actual interest on a 1.4 million rand property that you would pay with a 20-year bond. 1.7 million rand. Okay. And we offered those people 400,000 rand over and above their asking price. So technically, my husband and I, we saved 1.3 million bucks. Contract 2 years' time, our house would be free, bond free. This whole process is basically private financing. And it's like Robert Kiyosaki talks about using other people's money. We basically financed our house with the seller's money. We're paying him every month. In fact, I'm not even paying him every month. I've got a tenant in there now, and he's paying a portion of it, and I'm paying a portion of it. Guys, this is workable. It is doable. You just got to find yourself a good attorney. If you need my attorney's number, I really recommend her. She's somebody who can tell you whatever you need on the phone. But she's a really solid person that you can deal with. So email me. I can give you her details. This can work. It's working for me as a buyer and a seller. I'm going to show you how it's working for me as a seller. Okay, so here's a nice property deal for you if you're looking to invest into property. So I have a deal, no interest, no commission, no transfer fees. 15,000 rand deposit, and you pay me monthly 2,085 rand a month for 36 months. So for that amount, the total of that amount is 85,000 rand. I will give you a 113 share in a studio holiday flat in Port Edward on the Premier Hotel property. So the flat is about 5 minutes away from the Wild Coast Sun. We get a lot of overflow from the Wild Coast, especially during the peak periods. So as the owner, you get to use the flat 4 weeks in a year. 1 week in the spring, 1 week in the summer, 1 week in the autumn, 1 week in the winter. Okay. You obviously nobody wants to stay in or holiday in one spot all the time. You can rent out your weeks to your friends and family, or I can do it for you. The flat is listed on Airbnb and TripAdvisor, and the property will be listed. You will be listed as the owner on the title deed of the property as well. So here's one way to enter the property market using my finance. I'm actually financing you for this deal. You pay me back in installments, and you will become a 113 shareholder in this flat. I already have 2 owners. We've been making some good money for the past 2 years or so. We get usually up to 1,200 rand a night during the Christmas period, and it gets quite busy. We get a lot of foreigners coming through on Airbnb. So this is a nice entry point into the property market, and it's a nice way to subsidize your retirement as well, because this is just passive income. And 85,000 rand, man, you can't even get a car for 85,000 rand. A decent car, that is. Okay, so that is my property deal for you. So this is some of the return of investment that we're getting. Christmas week, that Christmas New Year's week, it's 1.5 per night. Winter holidays, we're letting it out at 800 per night. Off week, around 500 bucks per night. And obviously that part of the world is very seasonal. We run a lot of discounts and stuff like that. And look, we're making money. And the asset, the actual flat is increasing in value. And it's 85,000 rand, guys, to get in on this deal. Okay, these are some of the pics that we had taken. As you can see, it's a Premier Hotel. Premier Hotel is a big group in South Africa. They own a lot of three-star, four-star hotels all over the country around the airport areas. So it's a nice, fully furnished, nice hotel bed as well, very comfy. Okay, so I'm rushing for time. I only have an hour with you guys. So ideally, when we come to investments, this is a tool that I use to guide my clients. Okay, I don't want my clients to invest. You can see where investments is this triangle. If they haven't done things like retirement planning, they haven't they haven't looked after their family in terms of dreaded disease, disability, and death cover. Because I mean, if you invest $1,000 a month into Alan Gray Balanced and you don't have life cover, if you die today, what will your kids eat? Okay. What will Tabisa? I see your message. Thanks for coming here. We will be in touch. What will your kids eat if you are struck down with cancer today? How will you survive? How will you pay $1,000 a month to invest? So getting your risk cover in place first is essential before investments. And I would like to talk to you about it one-on-one, obligation free. There's no fee to sit down with me for 20 minutes and let me do this for you. It's absolutely free. It's a lot of work on my end, but I will do it for you guys. I mean, I took an hour of your time to do something different. I don't know if you guys are regular on webinars, but you're doing something different to learn something and to get out of your comfort zone. And I want to help you do that. If you guys have any questions, you can post it up on the chat or below the screen. If you're watching on your phone, email me. You guys have my email address. Also, link up on my Facebook page. It's Financially Fabulous Females. There's a lot of exciting stuff coming out with this brand in the next couple of months. So watch out for it. Join our page. There will be a lot more training happening. Next training is happening in July. It's the Womanomics series, Building Generational Wealth. If you don't come from a wealthy family needs to come from you. And I'm going to show you how to build generational wealth in South Africa. Okay, so I want to see you there. I will notify you about the details and the venue and stuff like that. This is a paid event for the main purpose because people don't really value anything that it's free. I'm not making money from this. The ticket is 35 Rand, so it's nothing. It will pay for your tea and your coffee. I just want people to commit to buying something because when they buy something, they will come. We have a lot of people that say they're coming and they don't show up and somebody else misses out. And I don't want that to happen again. So this event is going to be a paid event. It's not to make money. I said it's just to get commitment from people that say that they want to come and attend and learn something new. So that's it for the presentation. I hope you learned something. If you have every questions or anything like that, please reach out. Thanks for coming, Motsa Diso. Hope you have a great night at work. All right, so we'll chat soon. Reach out on Facebook, WhatsApp, Instagram. I'm everywhere. Have a good night.